Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. I had planned on recording this on Friday evening. However, I started watching this documentary. It was titled Devil in the Family, Ruby Frank something or other. It was about that horrible situation a few years ago. Ruby Frank, who was a YouTube influencer with his other woman, Jodie Hildebrandt. They were charged with child abuse. Pretty awful story. And I found it fairly fascinating, this documentary, because I knew about it, but I didn't know the exact details. And I thought it an intriguing story, a 3-episode documentary. I think it was done by Hulu, and that's I just needed to finish it. So that meant I didn't record the answer and reply video that I was planning for, and instead I am now recording this on Saturday morning at 9:54 a.m. on an absolutely beautiful, stunning Brisbane morning. Okay, so let's start. Answering your questions, replying to your comments. We'll go back 1 hour ago. Dev Shaw or Shah. I deeply regret getting into BrainChip at its peak. Funny enough, BRN just reminds me of Brisbane. Anyway, BrainChip at its peak. Lessons learned hard way. Thought with the demand for AI-related chips, this company will go up significantly in value. Now, BrainChip did reach its peak in share price and valuation early 2022. I'm pretty sure it was January 2022. A lot of hype in this company back then. Markup was well over $2 billion. And I was actually trading BrainChip at the time. I did sell some near the top. That was actually a good trade. Didn't sell completely. And then I sold completely out of BrainChip probably 6 months later because just of the chart. Now, one of the reasons why I was trading BrainChip was just because of the hype in the company. But there was also this possibility, just a possibility, and I'd say the chances of this happening would have been really low, less than 1%. But there is a possibility that what they were trying to create, their business model, would be highly successful, and this would become one of the biggest companies on the ASX. So I thought that was a very low chance, but it was a chance. I'd say that's much lower right now because since then, and we're talking about 3 years, this company has not progressed, has not moved forward. Revenue has not grown, and I just don't know what the catalyst is going to be for this company moving forward. Now, lessons learned hard way. This is very important because we're all going to make mistakes. And one of the things I really hate is when you get some investors sort of poo-pooing, saying bad things about analysis or brokers because they recommended this company, and the company has not done well. Oh, they're awful, they suck, that sort of thing. We all make mistakes, even the experts. The most important thing is learning from your mistakes. In fact, this is also true to our non-investing life. In fact, every single person in history has made a mistake, apart from maybe a newborn who's just died after being born. Anyway, so the most important thing is learning from your mistakes, and I would still consider BrainChip to be a story stock. And if you have a look at the chart, of BrainChip. This is a weekly chart. Yeah, a lot of hype in this company for about a 18-month period between the middle of 2020, and the share price did reach a high in January 2022. And the high was $2.34. That was a pretty amazing week. High of 234, low of 133, and that was almost the highest volume as well. And the share price has been slipping lower ever since then. And there's a possibility BrainChip will no longer be in the ASX because they want to move Dome missiles, whatever you call it, because they don't think we appreciate the company, even though the company still has a market cap of $400 million or so, which is still ridiculous for a story stock. Okay, so the most important thing is we all make these sort of mistakes. And what have you learned? What have you learned? Anyway, so the other thing I should actually mention here, thought with the demand for AI-related chips, this company will go up significantly in value. Now, there's a chance that what they are producing or what they have created is really good and maybe the best in class. But just because that might be true doesn't mean the company will succeed. We've seen plenty of examples in the past where the best technology has not succeeded. A classic example of this going back 30, 40 years ago was VHS versus Beta, or Beta, whatever you want to call it. Beta was, by all counts, the better technology, but VHS won in the end. Okay, so Joseph WK or 6KD, 5 years ago, brokers and advisors were pumping clients into this total dog at over $25. Well, I just mentioned this just because brokers and advisors were pumping clients into Appen 5 years ago. It was a well, I suppose in hindsight, it's a mistake because the share price has dropped significantly. But if we go to Appen 5 years ago, the problems that happened didn't really start until 2022, 2023. I just want to see what the share price did get up to. It was share price reached a height, yeah, of 42, almost $42 in August 2020. Okay, so a little bit earlier than I thought. And back in 2019, yeah, the share price at that point was in a beautiful uptrend. Beautiful uptrend at that point in time. And I doubt anyone would be saying this is a dog stock back then. I doubt anyone, even Joseph, would have been saying this is a dog stock back then. Because look at the chart, the company was absolutely hitting it out the park. I still remember this company releasing upgrades after upgrades. Might have been earlier than that, maybe 2017, 2018. And that's why the share price was in a beautiful uptrend, because upgrade upon upgrade. And then the trend changed, and really, there was some point probably in late 2020, early 2021 when you should have got out. It was pretty obvious that this company was under pressure. And yeah, this, in my opinion, this was just a trading stock at that point in time. Even before that, I think this was a trading stock. I didn't think you could say this was a high quality company. And for me, high quality companies are just trading stocks. They're not the sort of companies you hold for the long term. And I don't know what these brokers and advisors were thinking. Maybe they were just short-term trading. I don't know. But yeah, you will see this on occasion that brokers and advisors will get it wrong. They get it wrong all the time. They're only human. I have seen this time and time again. And one of the best examples of this is Motley Fool. I forget which service it was. They have like 5 different services. But one of the Motley Fool services recommended Damstra, we can't look at the chart because they're being bought out, recommended Damstra 2020, 2021 at about $2, and that was a peak. The share price actually popped up on the recommendation. And I just don't understand why people buy on recommendations. I don't understand it. And the share price popped up on the recommendation. That was high. And the share price went from $2.50 or whatever all the way down to 10 cents over the next few years. And that happens on occasion. Yep, it does happen on occasion, particularly with low-quality companies. MAP0V0 Mesoblast has been admitted to the ASX 200. Does that go some way and explain the forward share price after a good announcement? I'm sure the index funds want to buy their quota as cheap as possible. I would like to see any research on the relationship between being admitted or being non-admitted or being taken out of the ASX 200 and any share price performance in the short term. I would say there might be a short-term hit or benefit to the share price, but I don't know. I'd like to see some research because I have heard people buying into companies that are going to be admitted into the ASX 200, hoping or thinking there's going to be a nice price rise. So I don't know. Not sure. Anyway, so you're saying that the complete opposite, being admitted to the ASX 200, share price dropping. I don't think that's how it works. If anything, maybe more of a short-term rise. I think what happened with Mesoblast on the back of the positive news was just short-term negative sentiment, not only in the company, but also in the market itself. And I would say there was a lot of people selling no matter what. So we did see the share price drop a fair bit on a Thursday. It did reach a high on that day of 275, then dropped all the way back down to 245. So a 10% drop in share price from the high on the day. And I think this was just a bit of negative sentiment. And that's all it was, a bit of noise driving the share price down on the day. And I think a lot of that is just the overall market. Even though pretty good day on the Wall Street overnight, I think there's going to be a lot of volatility in the future. And we are starting to see some signs and very early signs of potential troubles when it comes to the American economy, particularly when it comes to consumer confidence. That's a really key thing to notice is consumer confidence. And one of the reasons why we're starting to see consumer confidence being hit in the United States is because they're just firing left, right, and center. And when you think your job might be under threat, even though it probably isn't, you're going to pull back on your purchasing. You're going to pull back on what you buy. It's just a natural thing to do. And that is why consumer confidence is so important, because really we want people to keep on buying stuff. And if you think you're going to lose your job, you're going to stop buying stuff. And that is why consumer confidence is really important. And what Trump and Doge and Musk are doing right now can and might be really harmful to the American economy. I don't like what they're doing. I do believe that we need more efficient government, but how they're doing it, I think, is the wrong way to doing it. I think it needs to be a more slower process, not a quick and hard process, because I think there is a significant chance the American economy is going to go into recession. And that will probably lead a lot of companies in the world going into recession, including Australia. Anyway, so that's why we have seen a little bit of weakness in the markets over the last week or so. And just that little bit of negative sentiment could send the share price of Mesoblast down. Anyway, so I'm keeping a close eye on Mesoblast. And if the share price falls below 238, I'm selling. Simple as that. Simple as that when it comes to Mesoblast. Happy now. Thanks for another video. Have a great day off. Yeah, sorry, no day off for me. Amazing, this journey. A month ago, this stock is valued cheap, drops in price 2 weeks later. Oh, it's cheap. Yesterday, drops again. It's cheap. What stock are we talking about here? Stock down again today. Oh, this stock is cheap. Gotta love investing. Happy to see things day in, day out, and month in, month out, and how things change and so quickly, especially on red days across the board. I'm not sure how I'm going to reply to that. I think I won't. I'll just leave that out there for everyone else to digest. Mark, DV5KW, High is been seeking on sale the inventory to lower build-up, hence looks profitable this half. High is being seeking on sale the inventory to lower build-up, hence looks profitable this half. So you're talking about working capital. So you're saying, yeah, inventory is actually really important. So I do actually look at inventory levels, and sometimes you can see companies build up the inventory, and that does have a negative effect on cash flow. Not so much profitability, but definitely cash flow. So if a company builds up their profitability, or not the profitability, their inventory, that will lead to lower cash flow. But if a company doesn't really build up the inventory, in fact, if they sell off the inventory, that'll have a really positive effect on cash flow. So you have to look at changes in working capital when you are assessing financial statements of companies. I'm thinking what Mark is talking about right here. Not sure which company he's talking about. Anyway, Chicky Chewy. Hi, Kneppy. Absolutely love your binary and non-biased information. I will be honest with you. I am biased. I think we're all biased. And the reason I'm biased is because I own companies. I own trading positions, and I'm naturally biased towards those positions. The good thing about me is I don't usually hold grudges against companies. I don't usually, like if I have a trading position that goes against me, I don't usually have a grudge against that company. I know a lot of people actually do. They refuse to buy companies they've sold out of. I think that's a mistake, but I do have biases. I try to keep my bias out of it, but I will have biases. Anyway, I'd love to know your thoughts on Mesoblast. I know you trade them. Yes. How do you think the next 12 months look now that they have been relisted in the ASX 200? It could be a short-term increase. And the announcement on their pricing for the approved product treating steroid refractory GVHD. I like the pricing. I think I like where Mesoblast is right now compared to where they were just a few months ago, because they have the FDA approval, which is very important. I do think there is potential for Mesoblast to have an amazing next 12 months. I would like to see the first financials to really confirm that. And if I see confirmation of really good uptake of their new treatment, I would maybe add to my position if I don't sell out before. Now, when it comes to trading companies, it's protecting my capital and growing my capital. It's sort of like a 50-50. I want to protect my capital, so I do have a stop loss for Mesoblast, and that stop loss is about $2.38. So hopefully it doesn't fall below that, and hopefully share price runs up. Hopefully they release more positive news, and yeah, I'm positive about Mesoblast, but I'm trading it, and because I'm trading it, I have rules. Now, if I thought it was a really high quality company, I don't put it in the same category as Telix, even Neuron, Clinuvel, because those companies are real, they're profitable. If I did, I'd probably more likely hold it for the longer term, but I'm not just there when it comes to Mesoblast. Maybe in a few years I will be. Trader Hooper, Telix was down around 9% early today. Still some selling after one of the founders sold 2 million shares in a block trade for reasons related to his divorce. I shake my head. People selling just because someone, the founder or co-founder, sold some shares. And yeah, let's have a look at this particular announcement. Christian, I think it was Christian, wasn't it? Christian Baron Drew, I can't even pronounce his name. Share price only down 6%, so it has rebounded. Here we go. Oh, the CEO, yeah, co-founder and CEO. It is Christian, because there was an announcement where they just mentioned me as Chris. So I was like, what? Here we go. Where is it? Here it is at $29.50. No intention to sell further shares. Still owns 6.3% of the company. Yeah, so no reason to be upset about this. We always see this happen for companies whose founder or co-founder or insider sells some shares. You see the share price drop, and then within a few weeks, it rises back up. It's just silliness selling because the founder has sold out. Not sold out, but sold some shares. I find it amusing, and I've done research on this. There's no relationship between a founder or CEO or insider selling and the long-term potential, not long-term potential, the long-term performance of the company. There is no relationship. Now, there is a relationship if you get a group of founders or insiders selling at the same time, and they're selling a lot of shares. We saw this with A2 Milk 4 years ago. Company released results, and the next time they could sell shares, 4 insiders sold a whole lot of shares. That was a negative sign. This is not a negative sign. People overreact when it comes to this, particularly in the short term. They see someone selling, insider selling, and they go, oh, the business is going wrong. I've got to sell out. Silly, silly, silly. Anyway, this is an opportunity, possibly. Possibly. You can see, yeah. So that's what I'm going to say in regards to this. I think it's just a silly overreaction. There's no reason to even be concerned about this. In fact, yeah, it's more likely to be a buy the dip situation. I sort of agree. Possibly a buying opportunity, yeah. Motivational Flavio says, let them drop. Well, because all the good quality names are still expensive, waiting for decent Pro Medicus, Zero, and Technology One. And Lawrence Chang says, can't afford to buy them all individually, so I'm buying the ATEC ETF instead. I suppose that's a good backup plan. I do prefer, of course, to buy individual companies. And the main reason behind that is if you do have a look at the ATEC ETF, let's do that right now. We'll do that very quickly. In fact, I should do another ETF video. So ATEC ETF. What I want to do here is just have a look at the makeup of this holdings and allocation. Here we go. Where is it? Here we go. I suppose I could download this CS feed. So you have Computershare, 13.3%. I'm not a big fan of Computershare. I'm not sure if I would call it a high-quality company. So again, one of the reasons I'm not a big fan of ETFs is because if I buy an ETF, there's going to be some companies in the ETF that I would say, no, I don't want to hold that company. Oh, no. But if you go below Computershare, Zero, I own. Car Sales is a company I'd love to own, but I don't. Pro Medicus, I own. RE Group, I own. WiseTech, I own. Technology One, I own. I'm not the biggest fan of SEEK, and I own NextDC, Life360. So I already own most of companies within this ETF. So there's no point me buying. In fact, we can have a look at all. There we go. There's no point me buying any of these this ETF. And if we go beyond that, we have Block, Coden, Megaport, Iris, SiteMinder, Data3, Domain. I own Gentrack. I own Bravura. So there's a few companies here that I do trade. Not the sort of companies I'd own for the long term because I don't consider them to be high quality. For instance, I wouldn't consider Megaport, Iris, SiteMinder to be high quality. Neither Domain Holdings, even Gentrack. I'm trading that. I don't know if I'd consider that high quality. But the weight of these is fairly low. And then if you go even further, we have Catapult, Nuix, Stickerdata, Ordinate. Anyway, so quite a few companies in this. In fact, if you go back to the start, and if you go back to the top 10, so 23, we'll say that's 33, 42, 50, 62, 68, 70% of the weight is just in the top 10. So that means I own the majority of these companies that make up this ETF. And yeah, I just like to stock pick. That's me. But ETFs is a good way to go if you're just starting to get into the stock market. It is also a really good way to learn individual companies. So you have a look at an ETF and just have a look at some of the companies. Like, I'm really surprised Computershare is the highest weight. Don't know if I agree with that, but yeah. Anyway, so good quality names are still expensive. Yes. Pro Medica is expensive. Xero expensive. Technology One, they're all expensive. And it'd be great, even though I own the companies, if we see a major pullback in the market, because some of these companies will be significantly cheaper. And that will be a great time for not only myself, but also you to buy these high quality companies at much better valuations. Now, the question is, will we have a significant market correction for us to do that? It could happen. AU565, it's really interesting. So AU5657 has the same. Oh, I thought it was the same thing as Joseph. Maybe it was just a. I'm pretty sure when I looked at this Joseph one, they had the same. What do you call this thingy? What do you call this? I don't know. The photo here. Anyway, AU5657, insane sell-off with all winners getting sold off. This really feels so bizarre, as the most sold off ones are the winners over the last 12 months. I'd say a lot of it that is profit taking. One thing I did mention earlier in the week, sorry, my nose is itchy, is that we did see a few of the small caps or the micro caps that have been really good performers being sold off. And I thought that was a sign that there's investors selling out of their more risky positions and maybe moving to more defensive positions, maybe like Woolworths or banks, which is really weird because I wouldn't consider the banks to be defensive. I thought maybe that is what's happening. And maybe that's what's happening as well when it comes to the best performing companies in the last 12 months. Profit taking. And in fact, I've been thinking of doing that, thinking of taking some profits with my best performing companies. And then the whole reason of doing that is just in case there is a sell-off. And if I wouldn't sell completely, maybe sell a third. That's it, just a third. And that way I can actually increase my cash levels. I also need a little bit of cash just because I've building a house, that sort of thing. I need a little bit more liquidity. So anyway, so I don't think it's unusual. CJ Smythe mentioned Pacific Edge a while back. I think you might have. Pacific Edge. Let's have a look. Oh, Daniel Dennehy did. And I tell you, Daniel Dennehy is loving life because share price of Pacific Edge has gone up 100%. And there you go. In fact, 4 mentions of Pacific Edge from Daniel Dennehy. I wonder if he's related to Brian Dennehy, the great actor who I believe died many, many years ago. Dennehy. There he goes. Is he dead? I don't know. He did. Oh, 2020. Oh, I wonder if that's COVID-19. Anyway, so let's go away from that. And, oh, we have a new comment. Pete TV Fun, that's 6918. Noble Oak was up 8% for a good part of the day, but just not enough momentum or attention to keep the trade up, and a bad day in general for sentiment. I like this company though. That's why I actually did feature it, because the share price is up a significant amount, and then a little bit of selling towards close of trading. In fact, we can see that, and that means the share price was only up 1%. I'm going to have a closer look at this company because I think there are some things to like, and I wanted to have a closer look. In fact, if we have a look at the summary, course of sales, yeah, within the last 10 minutes, we saw selling. It's just weird that we see selling right on close. In fact, it was a closing auction. Someone just needed to sell in closing auction, and the share price down about 4%, just the closing auction. The only thing I don't like about Noble Oak is the chart. So I want to have a closer look just in terms of valuation. So I do or don't mind holding companies I think are really good value for the longer term, even if they're not high quality companies. But yeah, chart's just not doing anything for me. So thank you for that. Back to that previous question. Where was it? Yeah, CJ Smythe mentioned Pacific Edge a while back, up over 100% today, a bit more ground to stand on with AUA inclusions, but still very risky if Medicare decline them again, which is a possibility. I'm just wondering if this gives Pacific Edge more power in regards to the AUA, the American Urology Association. Did I get that right? American Urology Association. AUA Urology, let's see. The American Urological Association. Sort of close. The thing about that, or Pacific Edge and their technology, is I have no idea. But I'm assuming that AUA know their stuff. You have to assume they know their stuff, right? And the very fact that they have done what they've done, say it's a standard of care, something like that, the standard of care, that gives Pacific Edge and their, what's it called, crypto bladder or something like that, maybe not crypto bladder, CX bladder, gives it some credence. And what happened with Medicare? Why did Medicare did not include them in their whatever? Yeah, not sure. So a lot going on there. So Trung Nguyen, I am horrible at pronouncing Vietnamese. I'm assuming that's Vietnamese. That's a fairly popular Vietnamese name, Nguyen. Anyway, so hi Kneppy, love to hear your view on Clinuvel's chart and current report. Thank you. I'll be honest, I haven't looked at the most recent report. And the main reason behind that is I've owned Clinuvel for a long time, and I'm going to own Clinuvel for a long time from now. I would say, without even looking at anything, in fact, let's have a look. Let's have a look. Why not? We'll have a look at the chart in a second. The chart doesn't not look good, but I would say there's a lot of value in this company right now. So the market is saying right now there's no growth in Clinuvel moving forward. So let's just have a look at the half-year report. Let's just have a look at the numbers. No commentary. Let's just have a look at the numbers. So we have revenue up 10.5%. Nice growth. That's exactly what I want to see. Revenue growing. Profit up 48.1%. Oh, no, after tax, it's up 28.7%, up to $14 million. This is in a half year. So we're talking about revenue or profit, approximately, I'm going to say it could be as much as $30 million, maybe. I wonder if there is a bit of seasonality when it comes to Clinuvel, but I'm not sure when it comes to their, what do you call it? Their, here we go. No, there's just a half years, first half's here. And you can see revenue has been growing. What I'm going to do is just go to FinChat. I'm just going to have a look at the half-yearly revenue for Clinuvel, just to see if there is a bit of seasonality. I do know when they used to release a Pennies for Seas, theirs was seasonality because their SNES, whatever it's called, it usually was given to clients or given to the patients. Patients is the better word. At the start of the summer season or like in spring, because it's more beneficial for them to be having it during those warmer periods in the Northern Hemisphere. Anyway, so let's have a look at the financials. And I'm just going to have a look at the revenue. And we want to have a look at half-yearly revenue. Where is it? Here it is, semi-annual revenue. And definitely, yeah, there's definitely seasonality here. Okay, so there is definitely seasonality here. And the worst season is the season we've just had. So when I say $60 million at least of revenue, no, I said profit. In fact, we have a look at profit. Let's just do this. We can actually say what the, what did they have? They had $40 million of profit, so $38 million of profit. We'll just say $40 million of profit, just as a round number, over the past 12 months. And that means the company with a market cap of 575 million has a P ratio of 14 for a company that is growing. So there is definitely an argument that this company is really cheap at these levels. Now, if you go back about 3 years ago, this company had a P ratio of like 60 and people were still willing to buy at that point. So the market is saying there's no growth at all for this company in the future. And I think that is a sort of long bow to draw. And I do think there is possible value here for Clinuvel. And that is a simple reason why I will not sell my shares in this company. It would be silly to sell shares in a company that you think are really cheap. Maybe not really cheap, but definitely to value. Now, the problem I have with Clinuvel is just a chart. And whenever this company releases anything positive, you just see selling coming in. And the share price just keeps on dropping. It's been a downtrend for a long time. When the share price reached its high in 2021 at $44, the company had a market cap at that point and a P ratio of really high. I thought probably you could say it's overvalued. And the market is just not pricing in any growth, which I think is quite absurd. So even when they did release a result on the 27th, did they release the results on the 27th? I believe they did. Yep, the 27th. The share price did pop up, and then we just saw selling coming in. You can see that in the one-day candlestick. Share price went to a high of like 12.50 and now down back to 11.50, selling. And we've seen that on heaps and heaps back. We've seen that back in July 2024, a really good day, and then selling right next day. So that is a problem. The share price is in a downtrend. It doesn't matter if a company is cheap. People who have bought in this company long time in the past, maybe 5 months ago, thought it was cheap then, see the share price keep on dropping, and they just have to get out of this dog stock. Remember, Joseph said Appen is a dog stock. The reason he thinks it's a dog stock, well, there's a few reasons he probably thinks it's a dog stock. One of the reasons why some people think a company is a dog stock is because the share price drops. The fundamentals of the company can be amazing. It could be a really high quality company, but if the share price drops, dog stock. And so we still have a lot of negative sentiment in Clinuvel. And every time I think it's really cheap and I think the share price will be supported, it just keeps on dropping. So I do think eventually there will be some value. There will be some value investors thinking or seeing, going, "Ooh, look at this, some value here." Now, interesting, some really big volume coming in on Friday. Let's have a look at what caused this really big volume. So, 1.8 million shares traded, which is unusual. If we have a look at the history of this company, very rarely do you see above 500,000 shares traded. And then all of a sudden we saw 1.8 million shares traded. So unfortunately, because it's on Friday, we can see a course of sales. It could be just a cross trade or something like that. If it's not one big cross trade, if this is just normal trading, apparently you can download this, but I'm not going to do it because I'm not sure how long that's going to take. I'm not seeing any massive trades here, much smaller trades. Lots and lots of trading here. So liquidity is not an issue with this one. And it just seems like there's just a lot of trading. That's it. Now, in the just after closing auction, there were some bigger trades, but these weren't huge trades. So this is really interesting that we've seen this really big volume coming in, and that can be a good sign that we are starting to see some investors see value with Clinuvel. So I would say there is potential. We have seen a floor, just potential at this point, just because of the negative sentiment in the company at this point in time. But nothing wrong with their report. Now, one of the reasons I do think the share price started to pull back was the threat of competitors. I haven't heard any more about threat of competitors. I'm not sure if that has gone. Maybe the competitors have stopped their research. I don't know, but I haven't heard any more threat of competitors. Anyway, consistent demand for SNES in Europe and the US. Anyway, so that's Clinuvel. Happy Now says, I know you don't take notice of world events. Well, that's not true. I do. I take notice. Or news and what you call noise. I think a lot of short-term stuff, a lot of short-term news is noise. But combined everything together, what's happening in the United States, it's starting to look a little bit more than noise. I'm a little bit concerned now. I did read a few articles in regards to economists saying, economists deep recession. USA, I see. This was not just Democratic, so we are the Democratic Party. A serious Trump recession. Economists are starting to worry about a serious Trump recession 3 days ago. Economists warns that Elon Musk is about to cause a deep, deep recession. And I'm starting to see more and more this. AFR is, well, that's 2024. Yeah, I'm starting to see a little bit more chatter about the possibility of a deep recession from economists. And we did see a little bit of news flow during the week in regards to consumer confidence. That is the first thing to pay attention to. The next thing is if we start to see employment or unemployment rise, that will be the second thing, which would be good. Inflation, I thought inflation was the biggest risk. So it's going to be interesting over the next few months to see what happens with the American economy, with all these people now unemployed. I think this could be a really significant drag on the American economy, and I wouldn't be surprised if they do go into recession. Definitely higher chances right now than I was thinking just a few weeks ago. I wasn't thinking that at all, but definitely we are starting to see some signs that America might be moving in that direction. Doesn't mean it will, but there are some signs out there, and we're starting to see those signs not only in the stock market. We're starting to see those early signs also in the bond market. Let's have a look at the bond market. Where is it? 30 years. So 30 years starting to drop. It's actually dropped a fair bit in the past month and a bit, from 5% down to 4.485. So we're starting to see signs. And the reason this is a sign is if we do go into a deep recession, inflation won't be a concern. I can tell you that much. It'll be the complete opposite. And so they might have to drop interest rates, which, again, people do believe that dropping interest rates will be really good for equity markets. No, it's not how it works. If they really start to drive down interest rates because the economy is really, really weak or in recession, that's really bad for the stock market. And you will see the stock market drop a fair bit, except if you're in Germany. Anyway, so even though I generally don't take notice of worldwide events in isolation, probably the best way to say it, I think most events don't have a significant impact, but anything that could cause a significant deep recession is of importance. Anyway, and Happy Now keeps on going in, but I can't help but feel the news out of USA with all this uncertainty, regardless of how well you pick the stocks for growth, is being dragged down at the moment, period. Yes. If we do go into deep recession, no matter how a company performs, it will be dragged down. Mostly. I think there'll be some companies that will do well, but definitely a stock picker at that point. And I would definitely be more towards cash than anything else. And to be honest with you, because I'm building a house, it would be good to have a little bit of cash on the side as well, because there's little things you have to buy along the way. Which and don't forget, I got the stamp duty bill. Was it $17,000? I was like, oh, jeez. Oh, anyway, Scott, II9RB, and EZZ at $2. Wow, if there was any chance to buy value. Happy Now, I've heard that for how long now? It's been under $2 many times this past month. And this is another case, just like a few other companies, where the company has released something really positive, but just because the negative sentiment in the economy and also just the share price has dropped significantly. You got all these buyers who bought at significantly higher prices. They see the share price rally on the back of really good financial results, by the way, and they just sell. They just, oh, I've got to sell. I can sell now. I can sell. And the share price has dropped now back below $2. I was not thinking the share price is breaking out. This is not a breakout for me. And that's very important. This is why I look for at least a 3-month high. I do prefer a 6-month high. The reason this is important because the share price, when they did release their results, it was only like a 1-month high. So if you go back 3 or 6 months ago, we're talking about so many investors underwater when it comes to EZZ, and a lot of those want to get out. That is adding pressure on the share price, adding supply of shares on the market when the share price rallies. That is a simple reason why I'm looking for that long-term high. Yes, 6-month high, I'll say, because you get less resistance when the share price pops up on good financial news. Yes. Absolutely true. So anyway, EZZ, I do think there might be value. I'll have to go through their report with a finer tooth comb. Share price down 12.44%. It's just bizarre. It's just wild. It's just people selling on fear, that sort of thing. There's no justification behind the share price dropping that amount. And with what happened on Wall Street overnight, look at this. One buy at 199, another buy at 214. The share price of this company could go up 20% on Monday. Anyway, so we are starting to see a little bit more volatility. That's the other thing, a little bit more volatility as well, which is another sign. Anyway. Oh, by the way, I was trading EZZ. I'm not trading EZZ anymore, but I do have a longer term position in the company. So no more trading EZZ, but just because I do like the possibility that there might be really good value in this company at current prices, I thought I couldn't completely set out. I like the value. I'm willing to hold EZZ for the longer term. And if I see a bit of a shift in sentiment in the chart, I will trade EZZ again. Scott also says successful tri-star reversal on Telix daily. I forgot about the tri-star reversal. Let's have a look at Telix. Oh, that's NASDAQ. Look at NASDAQ. Share price of Telix went up to $30 the other day. What's the heck is going on there? Tri-star reversal. Tri-star candle pattern. I've completely forgotten this one already. Oh, that's right. You get these three little, like, dojis. I'm going to call them dojis or stars, I suppose you can call them. Reversal. I'm not really seeing three of those. I don't know. I'd love to. What else do you say here? If you recall, gold wasn't the best example, but Telix nailed it. Perhaps it's time to reverse the truck up to the barn and start loading up on stock again. 3-star. I'd love to know what you're saying here. Stop loss. Okay. But I thought a reversal would be when the share price drops a fair bit. I'm not really seeing that. I don't know. Maybe I'm missing it. Fantastico says Eagers is sole dealer for BYD cars. Actually, I did know that, but I completely forgot about it, which are hot selling and taking market share from others. That would explain why they're so bullish. Yeah, that would be a great deal if they've done it. And I have no reason to doubt you. Yeah, so, yeah, that's probably why the market was or has been right about Eagers. There you go. CDG03, the previous weakness for Stealth Group in mid-2024 may have been due to too large shareholders selling down into a pretty thinly traded stock. Narelle Edmonds and EGP Capital. I like what you said about Stealth Group being a company with a plan. If they hit financial year 28 goals of 15 million profit with a PE ratio of, say, 16, $2 share price, well, their goals are going to be higher now. And I'm going to do a standalone video on Stealth Group. Why are their goals going to be different? Because of a new deal they have made with something, and they sort of hinted in that announcement that their goal is going to be higher. Their financial year 28 goal will be beaten, more than likely be beaten. And I do like what you've said here. Yeah, with I actually did some numbers based off their revenue, and they also gave an NPAT margin or something like that. And I did come up with an NPAT. My NPAT was like 14 or just above 14 million. And then I said a PE ratio, say PE ratio of 10, worst case scenario. There's still a lot of value in Stealth Group, even being really conservative. But if they do upgrade their numbers, then I'm being even more conservative. But anyway, I'll do a standalone video on Stealth Group in the next few days. Scott took some profits in Australian Ethical Fund. I still say ethical fund. I hope it creates a nice high and tight flag from here. Let's go back. I notice they've been selling off some of their Shyte positions, which has taken the brakes off their performance. I was really shocked by some of the companies they own. It's like, what? So I was talking about AEF. And I just mentioned in the video yesterday, or the day before, that if you just go to the announcements, you can see what companies they own just by changes substantial shareholding. So Rubicon, is that Rubicon? But if you go further back, there was one I was shocked they owned. Yeah, EPX, ENP Global. It's just a small company. Yeah, just I thought that was really weird they own that company. And what else do we have here? Prophecy, Shiro. Some of these are crap companies, Shyte companies, as Scott mentions. McPherson's, that's shite, I can tell that much. Anyway, Cogstate, yeah, I'd say that's shite. E-Road, I don't mind E-Road. Somnomed, nah. Anyway, so I was pretty surprised at the quality of company that Australian ethical funds, but it doesn't matter because a lot of investors just see the word ethical and go, oh, I'll put my money into this company without even looking at what sort of companies this company invests in. Whether all these companies are ethical remains to be seen because ethical is a subjective thing. Let's have a look at chart, and I think what Scott is talking about, a high, tight flag. I sort of know what a flag is and sort of flag and pennant. Tight means, so, yeah, where is it? What's a good one? Yeah, something like this. I do look for something like this all the time. Ooh, and I don't have to know. Yeah, this sort of thing. When you see the share price run up a lot, and then the share price just goes sideways. I do prefer that sideways movement, which might be more of a pennant or flag. I don't know the difference, to be honest. But this is a signal I see a lot. Share price runs up, share price goes sideways for a long period, and then the share price runs up. So that's, I think, what he's talking about there. I could be mistaken. It seems like Scott knows way more about those sort of chart patterns than I do. And we've started to see that sort of pattern right now. So the first day after that really good day, our share price has just gone sideways. So I need to see that a little bit more. Share price could continue going up, but I don't want to see much selling. I don't want to see the share price drop significantly. Maybe a little bit will be okay, but I do prefer that tight pennant or flag, or whatever you want to call it. They also, if we see more interest rate cuts, I expect this one to keep moving higher. Yeah. Nerd Burger. Can you please revisit Actinogen? I know you made a video 6 months ago after previous trial, minus 65%, but they just released another trial and is looking good. Okay, Actinogen, Actinogen Medical, ACW. ACW. Okay. Advancing to late stage clinical development. Okay. What I'll do is, because this company is not producing any cash flow, I'm assuming there's no cash flow. This is just a, what do you call it, a clinical stage company. No cash flow. This is more of a story stock for me. So this is not the sort of company that I do or would be attracted to. But if you do have a look at the chart, yeah, you can see the share price dropped a lot. And this was August last year. Share price dropped 59%. And yeah, the share price is starting to rally. Share price and chart looks pretty good. I don't mind this chart at all. So just because I'm not attracted to this company because it's a story stock, if I was just a chartist, if I was just looking at charts and that's it, I don't mind this chart at all. I don't mind this chart. And that's just me looking at charts. Now, on the business side of things, I wouldn't have a clue. Yeah, anyway, so that's what I'm going to say when it comes to Actinogen. Just released another trial and is looking good. Who knows how long this trial has to go for? This company could be a story stock for the next 5 years, 10 years. It may be a story stock for the rest of their life. I don't know, but yeah, the chart is the only attractive thing I have for Actinogen right now. And I would say this, Nerdburger, you know way more about Actinogen than I do, so there's nothing I can add. Nothing I can add. In fact, you should tell us more about Actinogen, why you like it. Motivational Flavio says, Objective is still a great company. We'll be watching closely to start a position. I will be honest, I'll have a look at the chart for Objective. I followed Objective for the longest time, waiting for an entry point. And I did get my entry point. There it is, at $12. I suppose I could have bought at a cheaper price, but at this point, when the share price was like $10.50, share price was showing signs of even going further down. I was thinking, oh, I could buy some shares at an even cheaper price. And when I actually did buy at $12.04, we can see the share price actually did dip a fair bit just prior to that. And I thought, oh, yeah, I'm not gonna. You can see it just dipping a lot just before that. It's down to $11, and then it rallied quickly. And when it dropped back in April 2024, I just went, oh, look, I think it's not going to drop much further from here, and I'll just buy some shares for the long term. And that's what I did. And so this is a long-term position for me. I'm not even thinking about selling Objective. I'm just playing games, trying to buy at the best price possible. And I think a way around that is just to buy an initial position. So what I should have done, I've been thinking about this, buy an initial position, but not a full allocation of shares. And then you can add to your position later in the video. Sorry about that burp. You can add to your position later when it's a winning position, as Just James Dean would say. Oh, talking about Just James Dean. Eagers is a slow burner, very cyclical. It has 10 bagged over 20 years. Stealth Group, add to your winner. And Australian Ethical Funds 5-year chart is scary. Let's have a look at Eagers' automotive chart. I have a feeling if you look at the long-term chart, it is the chart of a high-quality company. Let's have a look at a monthly chart. Yeah, this is sort of the chart of a high-quality company. It has gone from the bottom left to top right over the last 20 years. In fact, 20 years ago, the share price of Eagers Automotive was $1.40. So it's been a 10-bagger. So he's right. But a lot of noise in there, a lot of noise. Look at that. And it is cyclical. It is cyclical. I don't think I'd be buying on this breakout just because I think the better value was a little bit lower. A pretty good indication that it wasn't going to go much lower. You can see the share price dropped a fair bit in May, 15%, and the share prices went sideways. There was no drop in the share price from there. That was an indication that the bad news has been priced in. And then when we had the moving average crossover, that was another good sign. Yeah, anyway, so that's Eagers Automotive. What else? AEF 5-year chart. This one is all over the place, isn't it? Yeah, this one's all over. Well, maybe not all over the place. A lot of hype in this fund, 2020 to 2022. High in the share price, $15. It was so overvalued. I think I mentioned, I don't think this would be considered overvalued right now. And the chart actually, the weekly chart looks good. Rick Thellian, also about Australian Ethical Funds. If you bought in 2006 for 11 cents, 2021 was $14 at high, bed or returning. I'm guessing this was when it was overpriced, Michael. Yes. Yes, definitely. I think I still remember looking at Australian Ethical Funds. It must have been when it was at its highs and just shaking my head going, why would you be buying a P ratio like, I think it was like 80 or 90. In fact, we can actually check. AEF, Australian Ethical Fund, we can have a look at the historical P ratios of companies. So let's have a look at AEF. P ratio. So, it was even more than that. It was 140. I still remember it was just so high. I was like, why? And now it's, according to this, it's like just above 40. I think it might be even lower than that. I think it hasn't priced in the most recent report. So definitely better value. So yeah, Australian Ethical Funds back then when there was just so much hype, just got to ridiculous values. Ridiculously overvalued, and no surprise, it dropped from $15 to $3. It dropped. What's that? That's a 12. What's that? 75% drop in share price in a fairly short period of time. That's what can happen when a company is overvalued. Camplify looks like European-based camper van hire, hence the same as Tourism Holdings, can't sell older camper vans. I believe that is what Camplify does. It's just a camper van hire company. Hence, yeah, that's what it does. Yeah, I'm pretty sure that's what they do. And I'm pretty sure part of the business model was to sell older camper vans. Looks like they got in out of that. Fleetwood Mac seems to be accommodation. Yeah, mostly accommodation. It seems like what they're doing really well in. And whoa, yeah. Yeah, I did read that there was, NIB did ask for an increase in their premiums, and they were given it by the government. And I thought they wouldn't do that. I thought the government wouldn't do that. Anyway, they've done that. That's happened. Yeah, I'm a little bit surprised that's happened. I do think there should be a little bit more scrutiny on insurance companies because they have raised in premiums a lot over the last few years and their profits have soared. So I'm surprised there's not been more media scrutiny on the insurance companies like we've seen with the Coles and Woolworths, like we've seen with Coles and Woolworths, really, haven't we? And I'm surprised that the media haven't really caught on to that. So if you're a journalist, go attack the insurance companies. They raise the premiums, particularly like building insurance, because natural disasters are going to rise and they have to make money, and it hasn't happened. Just Stream Zine says, Challenger up 8%. Go value investors. Yeah, I believe it did bounce. I believe Challenger did bounce, and it bounced off. Look at that beautiful bounce. Bounced off 550, which was a nice support level. Mesoblasts. Question. Well, I've talked about Mesoblast a lot. I am going to end this video here. Sorry about all those other questions that I have not answered, but we're up to the hour mark, and I wanted to keep this video under an hour. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.